Alrighty, everybody. Welcome to the TraderMerlin show. Sorry, I had a little bit of issue on my end, starting just a hair late today. When I changed the latency on these streams, it created a little bit of a grief out there. So hopefully everything is going smooth on your end, and I will just continue on like normal, pretending everything is just fine. Anyway, happy Thursday. It was a long night for me. I was up, I recorded in my house from 11 p.m. until 3 a.m. last night, so I'm a little bit tired, but we will do our best to get things going. Now, that said, even though I was up till 3 a.m., took a couple hour nap, I still managed to do some trades today. Great trading day for me. I'll walk you through some of the positions that are opened up and some of the trades that were made. But I do want to talk about this first. I want to talk about this economic slowdown. Now, of course, I have an exclamation point as well as a question mark, because we don't really know, of course, if everything is totally slowing down or if this is a short-term little blip on the radar, if you will. So what is it that's actually slowing down? Well, we saw two pretty significant announcements come out today with regards to our economy and what that data is. So I'm going to bring it over to the first part, which is GDP. Now, here's your current GDP number. Of course, this is the preliminary. It starts with advanced, then it goes preliminary, and then final. I believe that's how it goes. I always get those two confused. Either way, it's an early reading of GDP. It's not the final number. So, oh yeah, I know everyone's worried about this verdict going on right now. Honestly, it doesn't make a difference to me what this verdict is. No, I'm going to go on with my life and let that soap opera, whichever way it decides to go, pan out. Doesn't impact me at all. Back to the GDP. Our previous quarter was 1.6, and industry experts, all the analysts and economists expected it to drop to 1.2%. Of course, that would be a significant decline based off of quarter over quarter. However, it actually came out better than expectation. So this is that conundrum we find ourselves in with regards to economic data. You had expectations lowering that bar so low that it became easy to jump over it. And in this example, we did jump over it. We came out at 1.3%. So all in all, it is a decline, but not as bad as expected. So what do the markets do? Right? This is that challenge we find ourselves in as traders, saying, okay, well, technically, GDP is bad. We're seeing it decline more than it did the previous quarter. However, it's better than we thought it was going to be, which leaves us kind of scrambling for direction in trades here. It kind of drives me nuts. Ricardo says still 7 consecutive quarters on the positive side. Yep, and that's a very important thing to pay attention to. Now, of course, you guys know me well. I'm a fan of the trend is your friend until the bend at the end. Now, you don't really get a great sense as to trend on this chart. Not just being honest, I don't see a great trend here. You do see, I guess, a longer-term trend is that GDP is over 0 and you're right around that 1.6 to 2% mark. Okay, fine. The only part here that I would say backs up the graphic that we had for today's show, which is this ominous-looking downward sloping trajectory. It's funny, I had AI draw me a picture. It actually wrote words, which it normally does not do, but it's slow down. Not meaning it's the end, but look at the last 3 quarters of GDP. We've seen it in November of 2023. You had a 5.2% GDP. This is annualized, of course. Then you came out in February with a 3.2, and now all of a sudden we have a 1.3. These are pretty significant declines quarter over quarter over quarter. Now, again, it doesn't mean that this is the end all be all, but it does show you a significant contraction over the past few months. Based off of these percentage declines, the next quarter reading could put us somewhere down below 0. And again, that would certainly be something that would roil the markets a little bit. We'll have to wait and see what that data is like. But remember, this quarter over quarter reading, this is something that gets revised and revised and revised. So the next number is going to come out, will be the final GDP, I believe. And, we should come out somewhere right around 1.3, 1.2, 1.4, somewhere in that range. But it does show slowing for the past 3 quarters. Not a very good sign. Because what does this do? This backs the Fed into a corner. We are talking about rate cuts. And if GDP continues to decline, they're going to want to cut rates more, which does dovetail right into my thought and many of yours thought that we're going to see at least one rate cut this year. Because if GDP continues to slide as it looks like it is, they need to juice this economy just a little bit. Now, there's that stuck between a rock and a hard place dilemma. I want to juice the interest rates, right? I want to cut interest rates a little bit to lower that, to stimulate the economy. But then by doing that, I potentially run the risk of starting up inflation fears yet again. So this is fairly bad news in my opinion, seeing GDP decline over the past 3 quarters. The real shock to the system will be tomorrow, right? We'll talk about that near the end of the show today. What do we expect to happen with that PCE price index or core PCE price index? That really is the one that's driving the Fed's decisions. And of course, I've said this before, inflation is far more significant than our GDP numbers or even our unemployment numbers at this point. So all in all, this piece of data not looking very good, but that's just one piece. Jury found him guilty? Really? Oh man, here we go. Honestly, this is a lose-lose for America. It really is. If he's found guilty, you're going to get half of the country, the part that supports Trump, is going to be in total outrage, and now will probably revolt against the justice system, create chaos, and etc. If he was found innocent, then it'd be the other side, protesting and creating chaos. So to me, this is just as bad. This is just drama that our country just absolutely doesn't need. Anyway, I'll stay out of it before I polarize the audience. I just think it's a circus. It's kind of a joke. It's a win-win. In my mind, it's a win-win for Trump, whether he's innocent or guilty of this, because if he's guilty, he riles his supporters even more, and he gets more and more attention. If he's innocent of it, his supporters are still there, he gets the publicity. To me, this is all one gigantic, almost scripted show. Unfortunately, it's there. I wish it could all just disappear and I could just focus on my trading. I agree, Ricardo. It's not a politics thing. It's unfortunate that politics continually bleeds into everything that we do. Yeah. Let it go. Margaret says the art of the deal at its best. Yeah, absolutely. It's funny, Margaret. I actually read that book when I initially came down to Irvine to take Online Trading Academy's classes back in 1998. That's one of the books I had been given by somebody. And I read the book. I found it interesting. The art of the deal. Yeah, back in the day. Anyway, we'll move on from that. Let's go back to stuff that really matters, which is our trades and our money. Margaret says Trump's a player. Hey, I mentioned the other day, he knows how to play the game. He is an absolute master of playing the game in his favor. He is a king of it. Hats off. I mean, that's a skill set that most people don't have, but he is a master at playing that game. Okay, so let's go look at the second piece of data here, which to me is a canary in the coal mine, perhaps. Now, we've had bad reports for pending home sales in the U.S. They had expected the pending home sales to go from 3.6% to negative 1.1%. Really seeing things slow down, maybe attributing that to the higher interest rates for 30-year fixed-rate mortgages. Again, we just breached 7% again today. I'll bring up in just a minute the chart of that 30-year fixed-rate mortgage. I wish I could just audio do it, but I have to type everything in. One sec. Mortgage rates. I want to do the mortgage rate chart just so you guys can see it. Today, we broke back above 7. I love this. This is hilarious. People always tell me that credit's not that important. I've had people that just say, oh, credit's not important. I don't need credit. The hell you don't. You all need credit. It should be one of the things you really should push for is making sure you got great credit. If your credit score is between 700 and 719, you're looking at a 7.9% for your 30-year fixed-rate mortgage. But if you've got great credit, 800 and up, it drops to 7.4. So you're saving yourself half a percentage point. And that may not seem like a lot, but a 0.5% on several $100,000 over the course of 30 years is a huge amount of money. That'd buy you a brand new Tesla Cybertruck just in interest alone. Yeah, I would agree. Those rates do seem rather high, Oliver. Let's see if I can go here. Let's use the Fed's site. Oh, yes, that's the way we should trust, right? Go to the Fed. So here's the Fed's information on 30-year fixed-rate mortgages. I'm going to assume this was updated as of today, and we'll zoom in just a little bit on the most current data, and it's showing 7%, showing 7.03%. So I think that part of the reason we're seeing, those numbers slide for pending home sales, there certainly is some pressure from higher rates, market saturation, etc. So to me, this is, again, another piece of bad news for the market, seeing it drop so significantly below zero. Remember, they thought it was going to go from a gain of 3.6% in pending home sales to negative 1.1. We came back at negative 7.7. Insane to think that big of a slip. Now, we did have a reading that was worse. We had a negative 10.2% back in October of 2022, but this is just not a very good sign to see that sort of weakness. I'm going to zoom in just over the past few years. And you can see that predominantly we're seeing pending home sales below zero. Obviously, in times of economic expansion and robust growth, we want to see this number above zero and trending higher. We really haven't seen that for quite some time. So thought that was another piece of economic data today that might be a negative for us. And as Andre says, housing affordability is at all-time lows. Yes, I saw that statistic as well. I don't have the chart here to show that. But yeah, it is a challenging time for anybody who wants to buy a home. For all of you in here that own homes, it's getting to the point that feel almost like you're part of an elite club. I feel bad for Gen Zers today. Of course, I think that they need to work a little bit harder and really work to get what they need to get to buy a house. But these prices have gotten so high, it's pricing so many people out of the market, and they may never have a home, which is probably one of the best investments that you can ever make. Buy a home, build equity in that, get it paid off, rent it out for residual income for the rest of your life if you want, and move on and build your your net worth that way. So it's unfortunate that we're seeing, a lack of affordability. But, as people like you and me are doing, we're buying investment properties. We're hoping to make more money with that. So we're going to hold on to those, and that drives prices up higher and higher. And of course, there's the discussion that commercial entities, big businesses like BlackRock, are coming in and buying up huge tranches of properties because there's so much money in the rental market. Who knows? We will see. Liz says, inventory here, Louisville area, is extremely low. That's part of the reason home prices are so insane. Same here. There have not been many houses in my neighborhood for sale. There are actually 2 that went up for sale recently, and I was talking to the realtor about it. Both of those homes, they don't want to sell. They're selling because they're both getting divorced. Both families are getting divorced, so they're just selling the house. I was like, oh man, that's not a good sign either. Is this part of the stress of the economy? Is divorce rates are going up, and therefore we'll see liquidity come to the marketplace? But those are the only 2 homes for sale in my entire neighborhood here, which is a pretty big neighborhood. Do you think it will ever be affordable? And if so, when? Oh, that's a great question, Blue Diesel. I think that housing will always be affordable in specific areas of the country, right? Those may not be the most desirable places to live. Do I think that housing will be affordable here in Southern California? I really don't. I don't see prices dropping. Now, there are statistics that show that there are people, we're seeing people leave Southern California, go to cities like Phoenix or go to Austin, Texas, moving away from California. But there still is a lot of demand for those properties. When you're close to the beach and close to the coast, as many of us are, it will retain that value. And I don't see it dropping significantly. If you look at the average price of the homes in my neighborhood, they're right around $1.5 million. Well, if you were to do the numbers on this, let's just really quickly go here. And I'm going to go back to this page, and we'll do a rough calculation here just to start. Let's see. Go forward one. And I'll go back to that calculator here. Let's say I buy a $1.5 million home. And I put 20% down. That means I have to do $300,000 down just to get my 20% down on that property. If I do that, it means I have to take a loan for $1.2 million. All right? $1.2 million, I might get a jumbo loan at 7.08%. Oh, it doesn't show me what my payments would be. Let's see if that does it next here. So if my loan amount is $1.2 million, gosh, that's a lot. And I'm on a 30-year fixed rate mortgage, that's $8,000 a month. $8,000 a month just for the house. That doesn't include property taxes. That does not include insurance. Of course, property taxes are going to be through the roof. If you're looking another $10,000, $12,000. Let's call it $12,000 a year. That's another $1,000 a month. So you're looking at $9,000 just for property taxes and your home mortgage payment. That doesn't include your insurance on it, doesn't include your food, electricity, all that other stuff that goes with it. So you'd have to be making about $12,000 to $15,000 a month just to buy the average home in my neighborhood. That makes it very, very difficult and prices a lot of people out. What would it take? Even if we dropped in this neighborhood, let's say prices dropped 30% and it brings you down to $1 million. You're still looking at a colossal payment. You'd have to be earning, well into the 6-figure category to afford a house in this neighborhood. So yeah, I think it's definitely pricing people out. I don't see here it dropping substantially, which is great for me because that means the property values will keep going up. The value of the equity in my home will continue to surge. But yeah, it does create a factor for those that don't have the income or the job. Even if you had two people working, you might not be able to get up to $200,000 and live comfortably with those types of payments. It's pretty insane. My college professor left Boston because she and her husband could not afford a house. Yeah, and where do you go? Where do you go? Do you go to some place like Montana and buy some rural property? That's awesome. I mean, I love living out in the country. I love elbow space and having a giant yard and garden. And I mean, honestly, I'll be honest, one of my big dreams is to own a riding mower. I want to own a riding mower. I don't know why there's this urge for me to own a riding mower. I know it sounds silly, but I feel like I just need to be riding a lawnmower. I got a hat on to block me from the sun. Got a Coors Light in my hand, and I'm just like, this is living, right? I don't know why I went there. Let's see. Well, the long game lawyer fees is part of the reason, Merlin, maybe. When supply outpaces demand or they set restrictions on short-term rentals. Correct. There are certain external factors, VB, that could bring those prices down. But are you going to see a 30% drop in prices? 40% drop? 50%? I'll tell you this. If we get to the point that I see a 50% drop in values here in Southern California, I'll be buying. I'll be buying single family homes or multi-family homes. If I can find, a couple duplexes or triplexes, that's going to be a cash cow for the rest of your life. So part of me, and it sounds horrible, I kind of hope the markets crash. So it gives me the opportunity to buy back in and really set myself up. Because I think you'd all agree, the older that you get, the more you realize how important real estate is. Let's be honest, folks. If you were to go back into your early 20s, did anybody stress how important real estate is? The ability to buy an asset that over time you'll ultimately pay off. You can rent it out and let those tenants pay off your mortgage. And then once the mortgage is paid, you have residual income coming in for the rest of your life off that property. There are very few investments that you can do that with. And if you have the spreadsheets right and the numbers make sense, there's a lot of opportunity in it. I really wish that my dad really taught me more about real estate. He's a realtor and I understand real estate, but not the concept of multifamily homes, buying an apartment building. Like ideally, I love to buy an apartment building with 10 units on it, fix it up, buy it at a discount, fix it up. That thing will be a cash cow for the rest of my life. And then, you do what you want to do. Travel the world, play golf all day long. That's how people get to those levels. OC property tax is 1%. Depends upon which city. Yep. It's slightly higher in HB. Yeah, and I'm okay. Costa Mesa is actually fairly cheap. I'm all right with that. Merlin, come on over. I have 2 acres. 2 acres, nice. I actually was looking at a 10-acre parcel in Northern California. I just didn't pull the trigger on it. It was a 10-acre parcel. It was like a 2,000 square foot home. It had this absolutely gigantic garage. I'm talking like a 3,000 square foot garage work area, which is another one of my dreams. I like making things. And it was like 1.2 million. I didn't pull the trigger. I should have. I definitely should have. John says, it's the problem tenants. Absolutely. Think of it like this, guys. When you pick a stock, you don't just pick any stock. You research it. You find out which one poses the most risk to your accounts and your portfolio. For me, tenants are no different. When I was younger, I was an investor in some Section 8 housing properties in Austin, Texas. And it was great. Just positive cash flow. Section 8 is low-income housing. They get government subsidies sometimes. So those checks were just pouring in. What I didn't realize, and I didn't do the vetting of my tenants, it was a property management firm, is how little care some people have about where they live. And I'll try to keep it PG. What one tenant had done, they took like wallpaper glue and epoxy and had taken adult magazines, we shall say, and taken all of the very risque centerfolds and things like that, stuff that certainly you don't want your children using that bathroom, and covered every square inch of that bathroom from the ceilings to the walls to the shower doors. They covered in magazine photos and then epoxied over that. So basically what happens to that bathroom for me when I kick that tenant out? That's a complete redo. There's nothing salvageable in that except the mirror, which didn't have anything on it. So yeah, tenants are definitely the problem. Research, and pick the right people, and you'll be fine over time. Let's see. You can also rent out the tenants trash your place. Correct. Yeah. All right. We went long-winded on that one. Sorry. That was a fun little tangent there. As you guys know, I'm a big fan of tangents, and that stemmed from the pending home sales. Now, of course, just because the clickbait here says economic slowdown, it's questioning it, right? I don't know if this is the beginning of something bigger. I certainly don't. What I do know is we have seen on this pending home sales, we've seen that start to slow down. We witnessed earlier here, GDP for the past 3 quarters has been slowing down. Now, earlier this week, we really didn't get any big economic announcements. You saw something like consumer confidence. That was a positive number. You saw S&P Case-Shiller Composite 20 Home Price Index. That increased. So we have some conflicting data here. We have conflicting data on, on this economic growth or slowdown. The big daddy, though, the big daddy is going to happen here. All right, let's go to tomorrow. So here's Friday. This is one that is going to have a big impact on our markets, one way or the other. Now, here you see that core PCE price index, and this goes well out. I'll stretch it all the way out into 2000. What do I go? All the way to 2005. So you're looking at 19 years of this. Now, just as an experiment, I'm going to put my cursor where I feel like the long-term historical averages, and that looks like right about here, where you guys can see the crosshairs, about 0.2%. Now, for most of the time, it was down at 0.1, then 0.2, and very few times between 2005 and 2020, very few times did we get it above 0.2. Now, for the past 3, almost 4 years now, we've been firmly above that 0.2. Now, every now and again, maybe we get a slight drop below it, but it's been pretty consistent. This is the big one, because if it does stay elevated, this is what our interest rates are hinged on, is this number right here. So tomorrow, my expectation is pretty much what they expect. I don't see a big change happening. I expect it to be at 0.3%. Anything that deviates from that, if we get, a 0.4 or a 0.2, anything that's not 0.3 will create havoc on the markets. Also remember, the longer that this stays at 0.3, the lower the probability is that they're going to cut rates. Does that make sense? Because if 0.3 is in fact our number, if we annualize that, 0.3 times 12, that's 3.6%. And as you all know, the Fed has said 2% inflation is our target. So that means they need it to be down here at 0.2. So if you're one of those traders that's hoping and praying that we get rate cuts, what you really want to see is a 0.2% reading tomorrow. You want to see this number drop. If you're like me and you feel that I don't see these numbers dropping, it's either going to be 0.3 or maybe 0.4. And remember, if we get a 0.4, then that shift on the Fed funds futures rate, meaning the prospects of rate cuts going forward, is going to change quickly. It'll change rather abruptly. So let me show you what the current numbers are for that, where we stand as of today. All right, we've changed a little bit. A slight increase that we're going to see a rate increase at the next meeting, which is going to be on June 12th. But really, it's all about that December, right? What is the hypothesis for the year? You notice it's an increasing probability right now that we are going to see only one rate cut, which we said long before it looked like this, right? Many of you are in that same camp going, now one rate cut. It's definitely starting to look more and more like one rate cut will be what it is, but we'll have to wait until we get a little bit further on in the year until we get to that point. So those are your economic slowdown pieces for the day. Again, tomorrow will be an important one when we look at the core PCE price index. There is some other economic data coming from around the country, around the world, but the big number is going to be that core PCE price index. You can see here, you do have some manufacturing numbers coming out for China. That was actually coming up here in a little bit, but you do have core CPI estimates for the European Union as well. So we can look at that currency charts in just a second. If you are looking at other news for tomorrow, you have personal income and spending. You also have the Chicago PMI numbers, and then FOMC member Bostic will be speaking. So it's a busy day for our U.S. markets. Okay, let's go and look at a couple different things. Big Eb, are you here today? Did you sell some puts on Salesforce? So I had a very interesting conversation with a friend of mine who is deep in the tech arena. And we talked about Salesforce. And while I like Salesforce just because I think it's a good business model, it keeps people trapped. You're locked into their services. And where else are you going to go? Once they have your data, you're kind of beholden to them and you have to continually pay more and more. Now, they've been raising their prices recently, but they've also been losing a lot of people. To who? To Microsoft. Microsoft is basically building a competition software to Salesforce. And there are a lot of people that believe that Microsoft is a much safer place to go because it's so massive. They have so much security on their infrastructure. They believe that that is a safer way to go, is by going with Microsoft. So let's look at CRM today. CRM tanked, had a brutal day, bounced a little bit during the session. It was down over 21% at one point, finishing the day down 19.74%. And the question was, is it worth taking a shot at this one to sell some puts and maybe buy at a lower level? When we looked at it last night, we had Salesforce down around that 224 mark, and I was like, man, that's a logical bounce point. Well, we opened up this morning and continued to tank. I looked at it initially and I was like, no, I'm not feeling that comfortable with it, because if in fact they are not just struggling internally, but they're also losing market share to Microsoft, who is now paying for people to convert. There's a cost to switch over, to get out of the contracts with Salesforce, to move that over to Microsoft. There's a cost to do that. Microsoft is saying, we'll pay that transaction cost, that transition fee that you might incur, we'll cover that for you. Because of course, Microsoft knows that you're going to move over to their services and you'll use their data analytics platform, but then you're going to use Microsoft Azure. You can use all the other services that Microsoft offers because it's just convenient. So for them, it's a loss leader to move you over. That has me a little bit nervous, particularly going forward over the next couple of quarters, if in fact that is true, that we're seeing that slight exodus from Salesforce because of cost. A lot of the long-term contracts are also coming up here as well. So do I take the shot? I did today. I didn't do a lot on CRM. I did sell some puts today. Liz says, I sold the June monthly 220s for, it says it's covered by something. It looks like 350. All right, cool. I didn't go that lofty. I actually did the CRM 200s. So I still feel like there might be some downside movement here. I went the 200 route, which to me is kind of right at the beginning of this, the very low point we see going back over the past few years, really going back into middle of 2023 and almost all of 2023, that low point being right around 195. So I sold the 200s. I didn't get the same premium that Liz did. I sold the June monthlies as well. I sold the 200s and I got 220. So that's the trade I did today on CRM. We'll see how this one pans out. I liked it because I'm getting over 1% rate of return for, another big slide in Salesforce. For me to be executed, let's just draw a line in here. Salesforce would have to fall another 8% from current levels to now be put to me. That's not that great. I'm not going to say that's amazing, but I'm going to earn over 1%. I'll earn 1.1% rate of return for the next 11 trading sessions, so call it next 3 weeks, just to take on that risk. I'm okay with that. Let me actually see. That's not for the next 3 weeks. That's June 17th. It's got to be the June 21st. There you go. So the next basically 3 weeks. I'm okay with that. Liz, I know they lowered guidance for next quarter. It just, speaking to people who are extremely knowledgeable helps me. Now, I know Salesforce's model, but I don't know all the inner workings of it. And I have a couple friends that are very intimate with the understanding of how this model works, as well as with Microsoft, having worked with both of these firms on integration processes. So it does make me a little bit nervous knowing that you're seeing more customers. I'd love to see the actual data on how many are leaving Salesforce and going to Microsoft. Because imagine if you had choice of insurance companies, right? You have your current homeowner's insurance, and I'm making up numbers here for an example. Let's say it costs you $2,000, $3,000 a year for your homeowner's insurance. Just bear with me in the example. $3,000 a year for your homeowner's insurance. But there's also a clause in there that if you decide to leave at any point, you're gonna have to pay a $1,000 penalty, okay? And you still have to pay the $3,000. But what if there was an insurance company that competed with that gave you slightly better rates, maybe better service, maybe better numbers, and they charge you $2,500 a year, and they said they'd also cover that $1,000 transaction fee to get you out of your existing contract? That makes it much more appealing, right? It's not as simple as I'm going to go from one to the other. When you have the other is actually helping you move and paying your cost, it makes it very appealing. And I could see a lot of companies deciding to do that. I've heard some nightmare stories about Salesforce and how they are with fees. and billing. So I'm not going to say I'm bullish on Salesforce long term. Am I expecting there to be a small bounce? I am. I do think you'll see a little bit of a bounce here. I don't believe you'll see it drop another 8%, but it could. And if it does happen, if I do get exercise at $200, my average price would be $197.80 on this one. So I'm all right with that. I don't think I'll get hurt too bad over the next 3 weeks, but again, got to be careful with that one. So that's trade number one. Another one I did was Kohl's. Kohl's got absolutely slaughtered today. It's just down 22%. These are two companies. Salesforce I don't think is going away. Kohl's might. I think Kohl's is just kind of floundering and going sideways. You can look at the price chart here. I don't see anything substantial from Kohl's that says this is a great company. It's going to rally and rise from the ashes here. I think Kohl's is kind of scary, honestly, because we've had very bullish markets and it's done nothing. Real quick, let me overlap here the SPY just so we can see this. Here's the S&P 500 against Kohl's. Right? That's not an encouraging sign if it can't even follow the market. So I'm not a real big fan of Kohl's at this moment. Again, I do think you get a market like this that's very oversold. It's fear-driven off of earnings. Granted, this is Kohl's. They don't really have fantastic... I like Kohl's. I go in there every now and again. But I ended up selling the... what did I have in here? I sold the $18 strikes. So let me put that in here. I'll put that at 18. There's your $18 line, which you guys notice conveniently is right at what? Those significant lows that we haven't seen for almost 4 years. They're a buyout target for a while. Cool. That'd be great. Either way, I don't think I'm going to get hurt on this trade. My rate of return on this one, I ended up selling the $18 strikes for 26 cents. So it's not like a lot of money, but I did sell quite a few of these ones. And that ultimately gets me a rate of return that's, about 1.5% for the next 3 weeks. I'm okay with that as well. This is, kind of grind it out, make a little bit here and there. I will tell you that for me to be underwater on this, Kohl's would have to fall another 14% from current levels in the next 3 weeks. Could it do it? Sure. Absolutely. But I'm not too worried about that one. And then the last trade I made today on the options side of things, I did a couple of day trades on the S&P, but that's not really that noteworthy. Those are just short-term day trades because I was bored. Last one was Rivian. And Rivian really having a nice rip today. It was up 7%, up to $10.97. I sold calls against my position today. I sold the $12 strikes, which I'm happy to let it go if it gets to $12. All right, you go up here, you go to $12. I wanted to go to the 1250s because that's more getting close to that supply level that goes all the way back to March 8th. But I sold the $12, and again, I've got a couple thousand shares of that right now, so that would net me from current levels. It would net me another, over $2,000 in profit plus the premium that I collected. The premium I collected on that was 45 cents. So, another $900 added to the gains on this one. So I'm okay with that. Honestly, I hope that Rivian just kind of slowly goes sideways here and maybe drifts up. But as long as it doesn't have a monstrous crash, I'll be okay on this one as well. So those are the three options trades I made today. And thanks. Thank you, Margaret. I love when you share these trades. Yeah, well, the good news is it's actual trades. It's real money. And, if I'm wrong, you'll see it live, and I'll admit that I'm wrong, and I'll walk you through how I manage that trade. So, yeah, I know a lot of people put on paper trades, but I actually have real trades on. So, there we go. Let's see. MTB says, thoughts on UIPath. Just started watching. Sorry if you already covered. No, I haven't covered UIPath. So, UPath, let's see. I know it's just that symbol is path, P-A-T-H. I always forget that one. All right, this is interesting. So we talked about this a while back. You might remember I wrote an article for barchart.com which talked about AI, and I know some of you have asked me to revisit that and update that one. And maybe I will redo that one, but I'll post it in the chat because I know some of you might be new to this channel. Of course, if you are new, hit that subscribe button and let me know what you think. So actually one of the first articles I wrote for Bar Chart was, I think it said Embrace AI. It says Artificial Intelligence, Embrace the Future. That was from March 4th of 2023. And one of the companies I profiled in there and said, I think this might be a good investment is UiPath. And I'll post that right here for everybody. There is the link. So there you have a link to that article just so you can check it out. Again, that's back from March of 2023. You look at the price chart, though, it's not doing so well. All right, going back to when I initially wrote the article about it, we are now below that price. Right, back into March, we were looking at prices right around 14, 15 bucks. It did rally over 100%, rallied up to 28, and now all of a sudden falling apart. I did not see the news on it. You can see the earnings here. They beat earnings. My assumption is going to be that they lowered their forecast and said something negative about the future. So we'll check that one out as well. Let me see here. Weak results. Okay. Look, when we talk about the hottest thing in the market right now, it's AI. There's no question. Everybody here, I think, would nod their head and go, yep, it's crazy. Oh, they changed the CEO. That'll do it. Let me get into that, and then I'll talk about the CEO here in a second, what that usually means. When you look at the hottest thing in the world, which is AI, everybody's talking about AI. It doesn't matter. I can make, I went to lunch today at Chick-fil-A.ai. I'll make this Chick-fil-A.ai, and all of a sudden shares will jump 30%. It's insane. So on a news like this, where you have a significant gap down, if this was them replacing their CEO, that may actually be a good thing down the road, right? You've got a drop today of 34%. It's down at 12 bucks. It was at 28, several months ago. Is this still a viable company? What do they actually do? And I brought up the parallel of AI because UiPath has some really interesting technology. It's about automating processes. And when I was doing research, they had an example of some of their features, which is basically they could draw on a piece of paper. Let's say I'm on vacation. I run a factory that makes widgets, and I meet someone at the pool. I've got endless cocktails, and we're in the pool just drinking away, and I meet someone, and they have this amazing idea. I'm like, wow, that's great. So I swim to the shore, of the pool, and I grab a pen, and I make a quick sketch about the modification I want to make to my widgets. I just draw that out there. And then I send that to the software that UiPath is running, right, at my company. And that software will take that design, rework it, come up with a new diagram and schematics to upload to our processes and change on the fly with just simple as a sketch. Now, I'm sure there's a lot more to it, but that's one of the articles I was reading at the capabilities of UiPath. To me, that is a very real-world application of AI, the ability to take a concept and put it into actual production with minimal effort. How does that streamline your operation? Immensely. It removes so many pieces that take months to redevelop a process or a product. So I like it. However, MT, I don't know how true that is. I'm not a user of UiPath, right? I only know what I read, which is not the best source. As we all know, the media can manipulate things. Most of the times, press releases are scripted to elicit a response positively for us to buy the shares. So I don't know at this point if UiPath is a good buy at present moment. I will look at it because I don't have a lot of exposure to AI companies, and on paper, I love what they said they were going to do. I actually really like the concept of using artificial intelligence to help streamline production, manufacturing. I think there's definitely a market for that. Does that mean their valuation should be at 12 bucks right now? Maybe. No. Does that mean that CEO was crooked and was doing things incorrectly? Maybe. But what I've seen in the past is there's that initial shock of CEOs leaving, like, oh my goodness, the captain is gone. The reality is there might be some very well-qualified captains that can do a much better job that can come in and steer this ship in the right direction. And maybe that's what's going on. I don't know, MT, so I'm not going to pretend that I do know. I have not dug into this one, but I will look at it because it's in an industry that I'm very interested in. Who are the competitors to UiPath? I didn't see any when I wrote the article. So when I wrote that article, I focused on what companies are actually using AI. Not fake AI, but artificial intelligence. And you have the big ones. So, of course, it was Microsoft. It was NVIDIA. Those are the big ones. Most of the major tech firms in the FANG stocks, they got some AI applications there. But then you look at something like Intuitive Surgical, ISRG, who's using AI for robotic doctors, which is an interesting idea. I don't know how comfortable I'm going to have having Hal the robot, give me open heart surgery. But that's something that is a very real world application of AI, and how does it adapt to changes in the human body and emergencies that come up while I'm in surgery. So I don't know if there are any direct competitors right now. That I don't know. So I'll look into this a little bit more. Thank you for bringing that one up, MT. For me personally, if I was to go off of just the information that I see, I would look at buying UiPath. And the only reason for that is they've been around. It's not like they're an unknown. They are a company that's been around for a little while. As you can see here, they're well under their initial IPO price. They were way back in here. Much higher valuations. They were all-time high. Looks to be right around 83 or 80. Actually, more than that. Talking around 87 bucks, 89 bucks. I mean, that's we're way discounted here. Now, obviously, there's something wrong. So if their valuation is currently at 12 bucks and their initial public offering was somewhere right around 70, something's wrong with this company. Something's not that good here. So not sure what that is. Maybe they're not deploying their model as they thought. Maybe there's issues with the product. Maybe they're not getting sales. And that would require me to dig into it a little bit more, which I might. But at first glance, I'd be okay maybe selling the $10 puts here and collecting that premium, being an owner at all-time lows on this one. Okay, I wouldn't do it for long term, but maybe for the next 3 weeks, I think you'll probably be okay doing that. Tim Freeman has a good question. Tim says, what is your strategy when you pick a strike and date? Well, there's multiple components to that. First and foremost, I am picking a date that does not give the buyer of that option a lot of time. Time's my friend because I'm selling just a little bit of time. The longer I go out with an option, the more time it has to reach those objectives. So when I just talked about this UIPath at a $10 strike price, do I think it's going to fall 12 or 13% in the next 3 weeks? It certainly could, but I don't think that will be that dramatic. So I generally don't do anything when I'm selling puts. I generally don't do anything past 30 days. I'd much rather be at that 1 week, 2 week, 3 week, maybe a month mark, but I don't do anything over 30 days. I just don't want to give the benefit. Plus, the time decay on options is significant in those last 30 days. It really just goes off a cliff. And I want that cliff, right? I want that premium to just disappear. I'd like to sell that premium, let's say at $3, and all of a sudden it just collapses in the last 30 days and goes to zero. That's the ultimate goal for me. As far as the strike, I'm generally using supply and demand. So for you Online Trading Academy graduates, it's all about supply and demand. Where do I think that next stall point is? Where do I think it's going to have difficulty going below? In this case, we looked at UiPath. I've got this, right now we're at 12. And I zoomed out here, your all-time low is $10. So to me, that's a logical price point. If I can get a decent amount of premium to sell UiPath at $10, I'll probably be okay doing that for the next 3 weeks. Because I don't see it falling to zero in the next 3 weeks. Certainly there's a shock to the system because of, from what you guys have mentioned, the CEO leaving or being pushed out, whatever the case may be. That's definitely one of those big shocks to the system. But normally we have that panic sell-off, and then you get a bounce off of that. So, maybe tomorrow I'll put my money where my mouth is. I'll do a little bit of research and see if UiPath does have fundamentals that are okay. I don't imagine that they're going to be fantastic, but I would say it's going to, they have to be okay fundamentals. Then sure, I'll look at buying some UPath here. I always say UPath, it's UIPath, but there you go, user interface. Some traders buy back the options before expiration. Yep, a lot of traders do. I don't know. A lot of times they're going to expire worthless anyway, so I'm okay with that because I don't deploy all my capital at once. So I know the logic is if I were to sell, let's say, an option expiring Friday, a lot of you would say, I'll close it out on Friday because I want to sell it again on that same Friday to get those 2 days over the weekend of free decay. Sure. That's definitely a way to do it. I'd rather just not make the transaction because I have to pay commission costs to close out an options trade as well. So I usually just let them expire worthless, start the whole process over on Monday if that's the case. Liz says, I close early sometimes, especially if I think I can get back in for good premiums. And that to my point there. I generally will just leave it. But again, that's a matter of personal preference. I'm not saying that what I do is the best way. I actually think that what Lisa is talking is a better way. But I have so many things going on that a lot of times I'm not glued to my screen. I've really done my best over the years to push my style to not be in front of the screen, right? In the 2 accounts that I have that are predominantly that 1% minimum target per month, I want to set those trades and I don't want to think about them until they expire. I don't want to really even care to look at them. I've been doing it a little bit here, sharing some of those trades with you guys just so to help out and maybe get some of you to understand that process of the wheel strategy and just selling and collecting premium. But yeah, there you go. Usually close early for that same reason. Cool. Excellent. Yeah, especially if you can sell them on that Friday and get, like I said, those 2 free days. All right, let me wrap up here. Again, I wasn't planning on doing an hour show, and lo and behold, here we are again. So for tomorrow, we've already covered the basics. We have really important economic data with that core PCE price index numbers coming out. That's going to happen 1 hour before the markets open. So be very careful with that one. It'll already be priced in. If you want to have yourself a little popcorn trade of the day, it's pretty simple. Just turn your charts to a 1 minute time frame, pull up the S&P futures, and just watch the wild action that's going to happen in that pre-market session. It should be a pretty exciting announcement, regardless of what that number is. Could be better, could be worse, could be in line. It'll still have a lot of volatility. Now, when the markets open, that floodgate's going to have a tremendous amount of built-up orders. So be careful that opening 15 minutes. You could get some really big whipsaws on that. But ideally, we will get some nice trends that start to form after that initial 15 minutes and get you some nice momentum trades for the remainder of the day. That's going to do it for me, everybody. Hope you enjoyed that one. Some of you have sent in questions and comments I did not get to today. I've just been really busy and tired, which I'm going to do another all-night session tonight recording more videos. So I will look at your questions, get them incorporated into the content. You can post them down below any of the YouTube videos if you have a question for tomorrow's show, or just email me at tradermerlin@gmail.com and I'll get to all that. So thank you guys so much. Have a fantastic remainder of your day, and I will see you for the wild core PCE price index announcement on Friday's session. Take care.